All right, welcome back to the Snod Pod with John Snodgrass, your mortgage resource, where we're talking real estate, appraisals, mortgages, and beyond. Back for a second here episode with Dan Ludwig, the owner and president of Integrity Appraisals, and he's also a real estate agent with Firefly Realty in Wauwatosa. So kind of we'll switch gears. Maybe we'll talk a little more appraisal stuff.
Got in this field now.
Yeah. Let's jump over to your other field. When and how did you decide that you wanted to get into being a realtor?
Yeah, so it's kind of funny. I think I started in about 2006, 2007. I realized that the refi boom was over. Couldn't have been more wrong about that. But like, there's just not going to be enough appraisal work for me going forward. So I got to do something to supplement my income. And so I just, the natural progression was to go into real estate as an agent. And I did that in 2007.
Okay.
Sold my first house then. But it's been insane like the last couple of years trying to do both. Yeah. Because like with the rates were in the 3s and even in the 2s. Yeah. I know when I refinanced with you, I think I got 2.6 or something like that. Yeah. Insane that like I'm never getting rid of this mortgage now. But
thank you to the business.
But yeah, it was. It's just I couldn't have been more wrong about that. But I'm glad I did it. And like I think doing both jobs kind of helps me in both fields. Really, it helps me to realize that there's a human aspect and a people aspect of the appraisal business, because a lot of times that just becomes very transactional and numbers wise, whereas like going out and showing buyers homes and having them miss out on houses or having appraisal issues come up, like there's real repercussions to coming in low on an appraisal, but that's what it is.
So when you're a realtor and you're talking to your sellers or maybe let's go buyers. Yeah, I guess both. I guess this could be both. You got your, normally you got your appraisal hat on.
Right.
And you're thinking, all right, I got to, come up with the value, what the market is actually saying, what the house is worth, not what somebody's willing to pay for it. So now you're talking to buyers and saying, hey, man, it's really tough out there. Mm-hmm. You got to get aggressive on this house. And what do you do there? I mean, you're having a conversation. Hey, to get this house, you gotta get to X price. Right. But by the way, it might not appraise that.
So that is a kind of a tricky fine line though to walk. I'll usually put a really solid market analysis together for them, where I'm like pulling comparables like I would for an appraisal, and letting them know like where I think the appraisal is going to come in at, and like I just kind of leave it up to the buyers, like the value is probably going to be up here as far as the accepted offer price. The appraised value is going to be down here. Like, what do you guys want to do? What do you feel comfortable doing? And I think like having that appraisal hat on, it kind of helps buyers with, knowing what their risk assessment is pretty much when they're writing an offer. But you have to be aggressive these days. There's such a shortage of homes, and going up against cash offers and things like that. That it's just it's hard when you're doing a conventional financing.
I feel like with the buyers I'm working with, especially if they're first time home buyers, it like takes them
a couple tries,
2, 3, 4 losses, if you will, and then they're like, all right, Dan, I see what you're saying. And I mean, can you maybe touch on? Are you talking about writing in appraisal gap?
Yeah, so I more or less let them know what it is and then kind of leave it up to that. Because every buyer's coming from a different spot. If you're talking about an FHA buyer is like 2 or 3%. I don't even know what the FHA is.
3.5%.
Okay, so if you're talking about that kind of a buyer, it's a completely different scenario than if you're talking about the guy that has 25% to put down and he can do 20%, or if the appraisal comes in low, then you can just change the rates of your term. So. Right. I was actually curious, like, to hear your perspective on that too. Like, as far as like the appraisal gap goes, like, do you find most people bring the money to the table, or do they, say the appraisal comes in like 25,000 low, and they were planning on putting 20% down? Do they modify their terms typically, or do they?
Yeah, I mean, so I'd say sometimes they do. Everybody assumes that, hey, if my appraisal comes in low, let's say
you have to bring it.
You've got to bring it. So let's just say hypothetical purchase price is $500,000. I'm putting 20% down, which would be $100,000.
Right.
Let's say it comes in at $480. The assumption is I've got to bring in an extra 20 grand.
Okay.
Which you could do that.
Right.
Because from a lending standpoint, we have to use the lower of the two values. So if the purchase price is $500,000, but it appraises at 480, we're stuck at that 480.
Sure.
So at 500, a loan size of 400 would mean you are putting 20% down or have 80% equity. If the appraisal comes in at 480 and you could decide, hey, you know what? I don't want to bring in any more money. And if you're putting the appropriate down payment, I would say 10% down minimum. We can usually not adjust the loan size.
Okay. But then you have to pay PMI.
But then you have to pay PMI. So going back to that example of, hey, 500 purchase and it appraises at 480. So now you might have PMI, and PMI is what's called, private mortgage insurance, where basically a company is just insuring the loan in case you go into foreclosure. It's not necessarily the bank that is stuck with the house and the loan. It's actually the mortgage insurance company. So they charge a fee, which it's actually the private mortgage insurance. Since I got in the business, the competition has gotten so fierce that the PMI is it's really kind of cheap, especially if your credit scores are on the higher end.
Okay.
I mean, it can be like $25.
Oh, that's it.
35.
Like PMI like 15 years ago, and it's way more.
Oh, it was like 150, 200 bucks. So I usually tell people going in, like, hey, it might come in low. And I show them, like, hey, you could bring in the 20 grand, or you could do this. And they're like, I could do this, and it only costs me 25 bucks.
And that's why I always recommend to my buyers to work with a mortgage broker first, because they always ask me what should I put down or what should I offer? I'm like, this is really a conversation for you and call John, you'll be fine. I'll look you up. So I think it's so important to have those conversations before you start looking for a house, and what your comfort level is with that kind of stuff. I think it's just step number one should be to contact the lender and then figure out who you're using for a real estate agent.
So I'll go over that with them. Hey, you could bring in the money, or it's a little bit of PMI. And I'll just say, hey, don't go to Culver's, don't go to Cops, once a month. And they're like, wow, I didn't realize that it's only a little bit more. Yeah, this is awesome. And then I personally encourage, it kind of depends on the situation, but usually I'll bring you in as the realtor, or we'll all talk together and be like, hey, it might be worth considering writing an appraisal gap, and which basically just means like, hey, I'm okay if the appraisal comes in low by 20, 30, 40, 50 grand. I mean, what is your take on appraisal?
So I've seen so many of those recently. Almost every single offer I review for a sale, or the offers are coming in from my listings and stuff like that, they all have appraisal gaps or no appraisal at all. And then people that just makes me nervous for my buyers. But there's certain times you can do it. I had a house this summer. I was working with my buyers, and it was in the 220 range. There's a list price, and we ended up writing for 265, and the thing appraised out above 265, but it was just underpriced. So there's certain times that you can be really aggressive, but there's other times you got to be really careful. I right before that, I advised them not to go over list price on that house, and they wanted to, because they were just in the habit of going 20,000 over every time. That was what they were comfortable doing. But a lot of times it's not the list price that really determines it. It's it's really what the market value is, which is what the appraiser determines. But there's a big difference between that.
Right.
Sometimes the house is priced a little too competitively.
Sure.
I think it's good to price it a little bit under what the market value is, just to get that bidding war and get the cleanest offer as far as home inspections, appraisal gap, all that kind of stuff. But if you go too low, there's a risk for that too.
Are you seeing cash offers?
A little bit. Actually, I sold a house last year that was in the $1 million price range, and we had 4 cash offers on it. I'm like, who has this kind of money? Good for you guys. But I was just shocked by how much cash is out there right now.
Well, so I can kind of give some intel on that. I work with a lot of financial planners too. Just been in the business a long time, and so I'll know that a buyer's, grandma and grandpa have a good chunk of money, or mom and dad
gifting them or something. Or?
Well, so I'll throw out a suggestion of hey, what do you think about this? Consider writing a cash offer.
Okay.
And we'll show Grandma and Grandpa's bank account.
Okay, there you go.
So that's kind of one route that we've done. And then ultimately we'll do the loan.
Okay.
But the buyer needs to know that, hey, if you lose your job,
right.
And Grandma and Grandpa need to know this too, or Mom and Dad, because I'll bring everybody in on a conversation.
Sure.
Like, hey, the risk is if, Johnny and Sally, son and daughter-in-law, lose their job before closing,
right.
You wrote a cash offer, so Mom and Dad or Grandma and Grandpa, that Barrett account is going to get drained.
So what happens if the appraisal comes in crazy low? So say like Mom and Dad like pay for the house.
Yeah.
I just had a listing of the same exact situation.
Okay.
The parents were paying for the house, and then the buyers are going to refinance and pay them back later on.
Okay.
Right. But that's what we're talking
Well,
about.
so what I'm talking about is a little bit different. Like I still get them the loan.
Oh, you do? Okay.
Right,
But you just show them that they could be a cash buyer.
So we're showing like,
Okay.
hey, so they're
That's
writing
creative.
a cash
Yeah, I
offer.
like that.
But I'm still doing the loan for them. Where it could fall apart is if Johnny and Sally lose their job.
Gotcha. Okay.
And then
they're on the hook paying.
Then Grandma and Grandpa, Mom and Dad, you're on the hook. So we only do this plan knowing that if this happens, guys, are you okay?
Sure.
Draining, your Schwab, your Baird, your T. Rowe Price account. And again, like I'm at 1,000 on this in my almost 20 years. But yeah, so it's a conversation. It's not for everybody. It's a handful of people that have done it. And it's usually people that they've lost a bunch of houses. Mm-hmm. But now A+, the owners of A+, came up with a cool cash offer program that's for, certain individuals. We kind of just rolled it out. So basically what we're doing is we're doing a thorough analysis of their income and assets.
Okay.
And if they fit our parameters, we will give them a proof of funds letter stating that we will guarantee you a loan at X amount.
Okay. So like they would just send that letter as their proof of funds to the sellers when they write an offer? Is that
right? So let's say using that 500,000 example, right? The plan is for the customer to put 20% down. Okay. Let's just say the plan is, but they keep on losing with just kind of the standard offer. Hey, we're going to put in appraisal, contingency, loan commitment date in there.
right?
So now this cash offer program, they can literally write with no contingencies. And if they're going to if the plan is for them to still do a loan with us and put 20% down, we will give them a proof of funds letter for $400,000, basically saying, hey, we will guarantee a loan of $400,000.
So you can just waive their appraisal, waive their financing contingency. It's all out the window.
Yeah, even if they lose their job, we're giving them a loan. Oof. Now,
makes me nervous for A+ mortgage.
I mean, it's so rare.
Yeah.
And obviously,
background
it's well qualified customers, and they know going into it. So like going back to the 500,000, we're still missing $100,000.
Right.
So if they're putting 20% down, we will then show you, the listing agent, hey, the other 100,000's coming from this account.
Okay.
Hey, they got $150,000 in a money market account at pick your bank.
Yep.
So we're providing 400 guaranteed, and then they've got that, and that makes it a cash offer.
Okay.
And it's guaranteed. We're giving them the money.
That's crazy. With like your typical 20% buyer, like, are you ever like worried about them like falling through on their financing, or is it like, obviously like, the job thing is a big part of that, but otherwise, like, I mean, you probably don't have too many deals that end up falling apart on those, right?
On the cash offer ones?
No, like on the just like your typical 20% buyer.
No, I mean, in my career, again, I'm going 19 years now. It'll be 20 next May.
Okay.
And I'd say maybe twice I can remember where somebody lost their job right before. And so when you've got a commitment, loan commitment or loan contingency in there, we've got it on the letter. Hey, if they lose their job, hey, we can't provide a loan.
Yeah. Tough.
So yeah, it's a tough situation, but I mean,
you're batting pretty good though. If you're 20 years, only two of them. So.
Well, so again, the cash offer program's not for everybody.
Right.
And what I'll do is I'll call the listing agent and say, because it's such a new program.
Right.
Because they're like, oh, proof of funds letter, It's like, no, we are guaranteeing, and, you know, the owners of A+ have signed it, and we've thoroughly vetted. And so I'll call them and say, no, this is cash. It's a cash offer.
Amazing deal.
I mean, it's so hard to get a accepted offer these days. Everybody's struggling. So the owners of A+ have, you know, are very innovative and, you know, willing to take on some risk. You know, obviously in the case that if somebody did lose their job, you know, as soon as you get a job, we're going to refinance you. And,
Okay.
you know, get you into
Typical
conventional loan. Right. So, but I mean, there's some details in it. So, you know, if anybody's got any questions on it, give me a call, because it's a cool program.
So in a situation like that, then what happens if the appraisal comes in, you know, way below where you're offering, because you're not writing in an appraisal, or do you still have the appraisal done as the bank?
So, well, sometimes we get lucky with an appraisal waiver, meaning we don't need an appraisal. So what we do is we'll run.
I hate those.
I know, yeah, they don't get the appraisal business. Sorry, Dan. Occasionally we got to run those. But like occasionally we'll run the customer's file, which it has their income, their assets, their credit score through Fannie Mae's automated underwriting system, or Freddie Mac's. Those are the two entities that essentially own all the mortgages in the country that are 720-some thousand or less.
Okay.
So everybody in the industry, what we do is we run files through their underwriting system, and it tells us we need an appraisal or not. Occasionally, we will get an appraisal waiver, which means no appraisal is needed, which just makes everything a lot easier.
That's awesome.
So like,
except for my business.
Except for sorry.
It's funny, the very first time I got an appraisal waiver for my buyers, I was like super excited, because I was kind of a little bit worried about the appraisal coming in low. And they're like, this is awesome. That's great. I'm like, wait, no, it's not. Like, this is taking business out of my pocket. I don't like these appraisal waivers. Like,
we got to put your realtor hat on.
Exactly.
Be happy.
I'm thrilled when I get them on that side of stuff, but don't like it for the other one.
Right.
It's a balancing act.
Yeah. So, I mean, it's, again, it's just so tough out there that we're just trying to come up with ways to help people get accepted offers.
Super creative. I never heard of anything like that.
We just kind of rolled it out recently, and you know, I've had a couple come in. I had, you know, somebody recently, you know, with a Firefly listing. The owner of our company.
You wrote
I didn't. He did.
Okay.
But I texted the agent just to say, hey, this is our cash offer.
How far into the deal are you guys right now? Is it?
I think it's closing. I just talked to Pete the other day. I think either closing or I think it's like a June 30th. Yeah,
you said that a little. Okay.
Yeah.
Very cool.
So,
I love it too. As a listing agent, I love to see that cash offers are obviously the best, because you don't have to worry about financing, which usually isn't a problem, but it can be. And then you have the flexibility of, like, you know, the appraisal and appraisal waivers and stuff like that too, which is
so going back. That was like a long answer to your question about cash offers, but like, so those are kind of some. Just because you write a cash offer doesn't necessarily mean that you're actually going to pay cash.
Yep.
I would. There's ways to do it and still get a loan.
Okay.
So, I guess maybe kind of concluding question. What I might go back to appraisals here real quick. Do you have any advice for real estate agents, or are you ever talking to, you know, maybe newer realtors about, hey, appraisals and the appraisal process, you know, maybe to prep their buyers, you know, to give them some intel since they're new to the business?
I have more tips for the sellers, obviously, because there's an art to, like, getting the appraiser to bump the value up, and even like disputing appraisals when they come in low. I end up helping a lot of my colleagues out with that. It's the best just not to attack. I feel like a lot of realtors will, like, give me a call, like, after they get the appraisal and it comes in low, and they'll just kind of like rip me a new one, like just going after me, like, you got this thing wrong, and this like it makes no difference. Like it makes no difference to the value of the house. So it's really important to, like, first of all, don't contact the appraiser, because he's not allowed to talk to you anyways. The appraiser's client is the lender. You need to go through the lender in order to do this properly first, which a lot of realtors just don't even know.
Right.
And then second is, like, talk about the comps. Talk about, like, what comps you think he may have missed or she may have missed. And then just go about it that way, and kind of like more of a, you know, you're working as a team to, like, try to get this thing up, as opposed to, you know, you're a jerk for bringing the appraisal in low. With the buyers, it's really just, you know, you have to know the market really well. You just have to, especially in this, like, super competitive market we're in right now. You can't say, whoa, $100,000 over list price if you don't know that they can go $100,000 over list price and be safe with that appraisal.
Yeah.
There's really no tricks to that side of the deal. You have to know the value. So that's it.
Well, man, this has been awesome.
Yeah, thanks for having me.
Yeah, thanks for coming on. I mean, obviously the first podcast more about appraisals, but here at Real Estate, it's just been. I felt like it turned over. You were running the podcast.
I'm a good interviewer. I like to ask questions and
Start your
learn
podcast.
more. There we go. This is what everyone wants, an appraisal podcast, right?
Well, hey, Dan Ludwig, Integrity Appraisals, also a realtor at Firefly Real Estate in Wauwatosa. Hey, really appreciate you coming on.
Thanks a lot, John.
Thanks.
Appreciate it, buddy.
Yeah. All right, another episode in the can here. This has been the Snod Pod with John Snodgrass, where we're talking real estate, mortgages, appraisals today and beyond. Thanks for listening. We'll be back soon.